All right, how is it going, everyone? This is going to be a trade recap of a long that I took today during New York session NQ, right? It's Friday, 21st of August. This is the trade recap for that. And let me not spoil too much because it was like watching paint dry. It was honestly like watching paint dry. The movement, the price action so far this month and the price action during this trade was literally extremely slow. It was extremely slow. Like from I'm trading the range chart, so it's the 80 range. Each candle from the low to the high doesn't close until approximately 20 points are created, right? Or 20 points have been created. So when you look at the time that I entered, it was around 11 a.m. New York time, and then to the time I've gone out was 11:34. So that was 34 minutes of sitting through this price action. If you go on to the 1 minute, it's even worse, right? It looks even worse because the range chart doesn't look that bad. When you look at it from the 1 minute, we were pretty much sitting around our entry level for 26 minutes. Now, for you intraday traders, for you short-term traders, I'm sure you're used to this. I swing trade as well. But for someone who like me, who is scalping, usually the duration of the trades usually shouldn't last more than 10 to 15 minutes. I want to be out by around 15 minutes. That's what the data has shown me, and that's what has shown to be my most profitable trade. However, this was far too long, 34 minutes. It was like watching paint dry. But let's start breaking down what I saw and why this was a pretty solid trade, even though it was a very slow movement. Right, so this is the regular trading hours. So the candles you see only represent 9:30 a.m. New York time to 4 p.m. New York time. This was where we opened. So we had a clear downtrend lower, right? We went a downtrend lower with balanced ranges being formed on the downtrend lower. So initially going into the session, I was anticipating for lower price action, right? Because the balance range is consistently is consistently being created at lower prices, which represents aggressive buyers and aggressive sellers both finding satisfaction at lower prices. However, these were my key levels. So this right here is a key level, this right here is a key level, and this is the volume point of control from yesterday. What I want to see is how we react off of these key levels. So this one over here and this one over here. In terms of context, we've already failed to find acceptance above this key level over here. So that is why that added to the bearish narrative, that added to the bearish confluence for lower price action. However, as we've broken down below this key level, aggressive sellers started to get absorbed here. And this is shown in the form of big trade bubbles. So this represents a single aggressive selling contract of 119. This is an extremely large sell order, right? In a nutshell, this is an extremely large aggressive sell order. If they don't get rewarded with lower price action, then that clearly means there is more passive buying than aggressive sellers. There's more supply than demand. So the market works in an auction. It has no reason to move any lower. Hence why these aggressive sellers didn't get rewarded with lower price action, and hence why you get that rejection away once aggressive buyers start stepping in. And then, buyers, they still couldn't really find acceptance within our key range over here. And instead, sellers took back control, right? Sellers took back control and we continue lower. However, yet again, there was no follow through with sellers despite taking back control. Because as we've taken back control, you could see CVD, footprint bar statistics, is started to increase higher and higher, which means even though aggressive buyers over here. So if I show you, right, this is the 30-second time frame chart. This is the range chart. XO charts, there is a bug with the big trades bubbles not showing properly on the range chart. So look at the time frame chart for now because that shows you where the true bubbles are at. The range chart doesn't show you, all the bubbles. You can see here, follow the axis, right? Where my mouse is on the left side, that is where the axis, that's where the big trade bubble was for the range chart. So here we have an aggressive buyer with 100 contracts, which is around here. But, what I'm trying to say is, when you had this retest, there was a lot of aggressive buying, but they don't get rewarded with higher price action. They try to come back inside our balance range, but they don't get rewarded. As a result, they get absorbed, and then the market continues lower. However, aggressive sellers, they try to continue pushing the market lower, but, for whatever reason, passive buyers are protecting this level, and this could be, it could be argued it was this level from yesterday, right? But, that's entirely down to you on whatever you decide. But what we know for sure is Passive buyers were protecting this level. Aggressive sellers failed to follow through because aggressive buyers started to dominate aggressive sellers. And here, that's where the delta for the footprint bar statistics started increasing along with CVD, right? So we've failed to find acceptance at lower prices below this key level. As a result, we slowly continue higher back inside this balanced range. So now it becomes, pretty two-sided delivery. This is going to become slow moving price action. So you really want to be selective with your trades and you really want to use the key levels. My key level is VWAP, right? Volume weighted average price. This was the level where I entered off of this trade. It was essentially a break and retest because this is what we had here. So here's what I saw. Not reload the chart. If I replay to this price action over here, let's pause that. Right, so as mentioned, I'm leaning bullish now. I'm leaning bullish to the opposing range high because we failed to find acceptance at lower prices. CVD is increasing. Footprint bar statistics is, for the majority positive. So aggressive buyers are in control from the positive CVD and any aggressive sellers here were absorbed. So the next key level would be this high over here. However, I still want to see that confirmation and this is what I am about to show you. So if you look at the time frame chart again, wherever it may be, right here, this was what I saw. As we broke above, Axis is fully broken. So this is 1050. Wait, no, mine should be like this. This is 1056, which is somewhere around here. We have, right? We break above, we get our retest in the form of the next candle closing bearish. And as this bullish candle closes, beneath the bullish, at the low of that bullish candle, we have an aggressive selling, an aggressive sell order of 51 sell contracts and aggressive buying contracts, 34 and 40. This is your initiation. This is your absorption. So let me make it more clear. We have a large aggressive seller here at the low of this candle. And then we have buying initiation stepping in within the candle. Those are your aggressive buyers. Aggressive sellers are absorbed. So we have that break and retest. We have that confirmation that sellers are absorbed. And now we have buying initiation. And this is where my entry was. Entry on the closure of the secondary candle. Right, it was somewhere around here. Stop loss below this low or around VWAP. And then I was looking to target the value area high, which is the range high over here. I entered on two positions, one on props and one on personal. Copy traded with a couple of my other props as well. But as you can see, as you start to play price out, this is what you get. This is where the paint started to, this is where the market, the movement started to slow down a lot. Because as you come up to this high over here, we have large aggressive buying bubbles, right? Large aggressive buying bubbles at these heights. And large aggressive selling stepping in. So this becomes a key protection level. Until this level breaks, the market is likely going to just consolidate between this VWAP and this level over here. So I wasn't too aggressive with my stop loss. I wasn't looking to go break even straight away until this level broke. And as you can see, we messed around there for quite a while, right? This was around 26 minutes, like I said, until eventually this high got taken out. Once this high gets taken out, that means aggressive sellers are trapped and passive sellers have been overwhelmed by aggressive buying demand. As a result, once you have this closure, you can start to trail your position, potentially go break even, and then you have that pump higher. Because now there's no more resistance level from this high to our next level of resistance. And just like that, that is the trade. That, it's simple. It's extremely simple. Even though August has given you an extremely bad price action or extremely bad market conditions, when you have the right framework, this is what you get, right? A correct framework keeps you out of low probability trades and puts you into, high probability trades. It gives you a clear guideline and clear criteria for when to stay out and when to stay in the market. So hopefully you found this trade recap useful. If you did, make sure you like and subscribe. If you want to work with me one-on-one, then check the link in the description. Apart from that, I'll see you in the next one.